This is a chart of the Russell 2000. It's looking like it's topped out since February, maybe try to make a new high in March, and it's been trading sideways now towards a downward bias. And few reasons for that is number one, interest rates going up. You start pricing future earnings in the net present value, and at higher rates you have to discount that. Second is the Biden administration is talking up raising corporate taxes, and that will be a hit. And also third, with interest rates moving up, the cost of borrowing or current debt or refinancing debt is also a negative. So they got multiple fronts where they have a challenge to their earnings and forward PE ratios, and so the small caps are in kind of a bind. The semiconductor index, there's a shortage of computer chips, semiconductor chips, and there's also a challenge in terms of the deployment of 5G networking. Plus there's an issue now where China is causing issues and raising concerns of cryptocurrency mining. And there's something that people that are invested in cryptocurrencies like Bitcoin need to recognize, that even though the currency itself, the digital currency itself, is decentralized and so fragmented that central governments can't really control it, but what they can really control is the mining. And what always has baffled me is the cost of mining. And I'm talking about the cost of energy required, the amount of energy required to mine like a Bitcoin, right? And what's interesting is that if you look at the all-in sustained cost of getting 1 ounce of gold out of the ground, which is around $1,100 an ounce, and gold sells for $1,700, and then you look at the cost of mining a Bitcoin versus the price of Bitcoin today, I think eventually the difference between what you can sell 1 ounce of gold and what it takes to mine gold and will be kind of almost similar to the cost of mining Bitcoin to what the price of Bitcoin will be. If you're going to treat Bitcoin as a value asset like gold, and surely Bitcoin is very volatile, and again the question is it really a value asset? But the bigger problem with the whole thing, with this whole mining thing, is the cost of energy and the amount of energy we need to mine the digital currency. And if we are focused on reducing, the whole thing with the environment and all, and you look at these Bitcoin mining farms that are set up, it is outrageous. So, and I think the semiconductors like NVIDIA and AMD, the graphics processing chips that are used, they may be at a risk here if Bitcoin tries to taper off or level off. One way to check out on Bitcoin mining is always GBTC, that's Great Solid Mining Trust, and you can see here that is basically leveled off, and it's in line with IWM. And if this sells off, a lot of the hot money will be coming out of the market, and right now there's a lot of stocks that are basically have no bid, and when you have correlated selling, companies' fundamentals don't matter. If you own any stock because or a company because it's a great company, it has earnings growth, when liquidity comes out of the market, it does not matter, right? Your company's fundamentals are irrelevant because there's correlated selling, okay, and that's a concern. I mean, semiconductors are taking a big hit. I do own quite a few semiconductors, but for right now, it's all not looking good. Uh, you know, um, uh, Logitech is one stock I like going into earnings. They really benefit from the gaming and online schooling. They sell a lot of computer devices like headsets, keyboards, mice, and speakers. Wireless headsets, and I think this company will have a good year. The other one I like that reported an upside to earnings. Uh, 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 you know, um, Actually got upgraded is your oil change company since the economy is opening up and people are starting to move around, right? You got to do the oil change on your car, right? And I've been talking about Valvoline for quite a while, and I want to highlight it. It had a nice breakout today. It had a $40 price target. Maybe that was an incentive for the stock to break out, but I've owned this one. I like it, and this is the kind of stock you want to own through the summer months, because as things open up, people drive. You got to do your oil change, and it's a pretty easy one. MPW, I picked that up last week. I like it. It's sitting good. ORI, again, insurance underwriting. I like this company. The other one I am starting to add, and I'll share with you guys, is SAFT. SAFT. Okay. So I'm starting to add this stock. Okay, Safety Insurance Group. Okay, they provide underwriting and insurance in the Northeast. They have really good earnings, and I like this one as the economy opens up. And if it breaks out of 90, I'm going to load this thing. Okay, I gave you guys NL. That's the chart. A little bit of a sell-off today with the market, but it's looking good. So you have to you have to have a balanced portfolio between value and income and growth. But on days like this, when you have correlated selling, you really can't do much. You got to take the hits, and you have to be careful not to sell off good companies just because they are down, and it has nothing to do with the fundamentals.